Hey, welcome. We're looking at Chapter 7, posting journal entries to the general ledger accounts. Just a quick review. You already know the first three steps in the accounting cycle, so the fourth and fifth steps, we've already gone over them, but you're going to learn how to post, and you are going to learn how to prepare a trial balance, because if you look right now, for as far as posting is concerned, if you look just at the general ledger by itself, you can't really tell me how an account has increased or how an account has decreased. And posting is just you're transferring the information from the entry you made in the general journal into the ledger, or to the which will show each individual account. So by doing this, we can see exactly how each transaction has affected each account in the ledger. And then when we do the trial balance, all that will do is make sure our debits and credits are equal, so we can go on to the sixth step in the accounting cycle. So if you look at these various transactions, you cannot tell me exactly, hey, how many expenses do we have in the payroll tax account? How much do we owe in Social Security tax? How much do we really owe Wilmington Shirt Factory? By just looking at this alone, you can't tell me exactly what the balance is for each account. So we have to post these amounts into these specific accounts, which are located in the general ledger. Now, the general ledger, all it is, here, let's go back. It's like a book, a file, and that's why I said some of your assignments will seem a little bit longer, but really they aren't. It's just because the ledger is made up of all your individual accounts. If you notice your general ledger, for an example, let's say this was the cash in bank account. The account number is written down, the name of the account, the date, in this case, December 1st, 2016, first entry on the line. Now, the word balance is written here only if a balance from the previous month, in this case, November, there was a previous balance, then that balance would be written down with a check mark in the post reference column, because this didn't come from a ledger, or I'm sorry, from a journal. So basically, most of your permanent accounts will have a balance from the previous month. If so, you would write in the item column balance, you would put a check mark in the post reference column, and you would bring up the updated balance for that particular account. And sometimes this will be done for you, but sometimes you're going to have to write the account name, cash and bank, and then what the account number is, and obviously this information comes from the chart of accounts. Now, posting process, if you do what I tell you to do, once again, go left to right. You won't make any mistakes, but unfortunately students come up with their own shortcuts and mistakes are made. Now, how many times is it done? It all depends on the size of the company. It could be every week, every month. If it's a small company, your larger companies, you do it every single day. But the posting process is the same. It doesn't really matter what size the company is. It just matters how often it's done for the company. Left to right, you have to remember that left to right. So if you follow with me, remember here, let's say this is our general journal. We have the date, October 1st, 2016, the current year. Our cash and bank, our two accounts, our debit and our credit, and our source document. Then we had the debit. Oh, it looks like the credit went on the wrong line, but the credit should be down over here, 25,000. Obviously, the page moved. So what would happen is, let's say we're going to post first. We go left to right. So our first account, cash and bank. So what we do, step one, we look up the account in the general ledger, in this case, cash and bank. The account number is 101. We need to know that. So the first thing we do, left to right in the ledger, we write the date. Hey, when did this occur? October 1st, 2016, the current year. The explanation column would generally be left blank unless the permanent account, had a balance from the previous month. Do you remember what you should write in here? If it did, yes, you'd write in balance, and a check mark would go here. But let's say in this case we just started our business, so we would leave the explanation column blank. Moving on to the right, post ref was postal reference Where did this come from? This came from the General Journal, page 1. That's why the page number is important. So we write G1, not GJ1. We write G1. And what did we have? We had a $25,000 debit. So you write $25,000 in the debit column. And then what is the new balance? It's $25,000. So you've done this step, this step, this step, and this step. So then once you've done this and found the correct updated balance, you then, and I repeat, your last step, what I need you to do is then you would write the account number from the general ledger into the post-reference column in the General Journal. This is the last step in the posting process. Students forget this all the time. You must put this in last. This lets you know that you have posted $25,000 into this account, and this lets you know that you have completed that process. If you put this in later or before you even do everything, you might forget that you did not post that and you'd be off $25,000. Please, I can't stress it anymore. Put the account number in the post-reference journal, post-reference column of the General Journal. Put the account number in last. So we go left to right. October 1st, page 1 of the General Journal. So it's G1. We had a debit of $25,000. Our new balance for cash is $25,000. Boom, the balance has been figured out. Put in the account number, in this case 101. So some points to remember. Use the date of the original or date of the journal entry, not the date when the posting is done. So if the entry was December 8th and we're doing it on December 10th, do not use December 10th, use December 8th. Explanation, we already said leave it blank unless we have a balance from the previous month, and you'll see more of that later on. G stands for General Journal. And the last step, always return to the journal and record the account to which you just posted. This tells us that the entry has been posted. Put the account number in last. All right, so let's go over some of the information here of our next slide. Now, if an account has a zero balance, boom, it's a straight line. That's all it is. On the computer, you're going to use the apostrophe and then hit the minus sign numerous times to make a straight line. Okay, so once again, if this actually had a zero balance, all right, so we got left to right, December 1st. So we have the word, now instead of explanation, this says item, doesn't matter. It says balance, we have a check mark because from the previous month in November, we had a balance of $22,066.07 that we are carrying over. In this case, the account is 1105, not 105, because obviously we have more accounts. Okay, so let's say, unfortunately, on December 14th, notice we don't write the month again, just the date. We only write the month once until it changes. On the 14th, General Journal, page 1, we had a credit of $22,066.07. So we probably wrote out a check, and now we have a zero balance. If you notice the straight line, the balance is found on the balance side of the account. Nothing goes here in credit. There is no balance on the credit side. Cash is an asset which has a debit balance. So the balance, this line will only go on the balance side of that account. That's really important to remember. All right. Moving on. So once again, let's just do this. If we have a balance, first page of the account is filled, the second page must be open. All right, same thing as we did before. If we had a balance from the previous month, we would have to bring this up. So we would have to write, in this case, December. Let's say this is December 15th, 2016. Balance, check mark. We're bringing up the updated balance, so we would put the amount right here, whatever it would be. Let's say 22,000, 15,000, it doesn't matter. And then the next transaction would go here. If it was still in December, the 17th, blank, we leave this blank. whatever page number is in the general journal, and if it's a debit or credit. Obviously, if it's a credit entry, we would deduct or subtract this amount from the debit balance to come up with our new balance. People forget that, so please remember that. And we'll have some more examples following. All right, the last thing you have to do, you have to prove the ledger, and we make a trial balance, which is the 5th step in the accounting cycle, which makes sure that our debits and credits are equal. And if you notice, same type of heading, the name of the company, the name of the statement, in this case trial balance, and a specific date. It does not say for the month ended. It's a specific date because this is what the accounts are valued at, or the balances on this specific date. So if you notice, all the accounts are listed regardless of whether or not they have a balance. Now the reason that income summary, which summarizes whether or not we made money, has a line in both the debit and credit side is because we're not sure. This doesn't have a specific debit or a specific credit balance. It all depends whether or not we had a net income or a net loss. So we put a straight line in both of the columns. Whereas if accounts payable did not have a balance and it wasn't 500, what we would have done, we would have drawn a straight line instead of the 500 like this. This line would be here, not on both columns, just on the balance side. So if you notice, all the accounts are listed from the ledger. I don't really care if you put the account numbers in. You add it all up. You have a single underline here, ruling. You have the word totals. If you notice, it is indented. And once the debits and credits are equal, then you would draw a double underline. All right. All right. And you know what? As far as all this, what you need to know here, the biggest mistake students make is they don't add it correctly. That's all, or they entered numbers incorrectly. It's a matter of going back and double checking to make sure you did it the correct way. If you made a transposition error, you need to know what that is. So you switch two numbers where, 325 is now 352. So what you did, you just switched the numbers around because you're going pretty fast. A slide error is where you move the decimal point either to the left or to the right. So you wrote 1800. Instead of writing 1800, you wrote 18,000, which is a huge mistake in the business world. So it's a mistake you really don't want to be responsible for. So remember, a transposition error, your numbers are reversed. A slide error, you added a decimal point. As far as errors, once again, don't worry about dividing the difference, etc. No one ever does it. Let's just be honest. What happened is you made a mistake. That's the bottom line. Now, the next thing you have to remember, if you find out that you made a mistake after it's already been posted, then you have to make a correcting entry. And I think we are going to do that starting on the next slide. So thanks for watching. Once again, if you have any questions, just send me an email at layman@fenton100.org. Have a good day.